In today's video, we got to talk about SpaceX. What a disaster. And things could get much worse. We also need to talk about the Nasdaq, where there is a major technical warning sign developing in the charts. You need to know about it. Things could get really dicey for the tech stocks and therefore for SpaceX in the coming weeks. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. Welcome to the channel. If you're new here, hit the subscribe button so you don't miss any videos, because if you were subscribed, you would have known that I put out videos, well, pretty much here at the end of June, third week of June, saying if you're long SpaceX, put a stop right below 150, or if you want to short the stock, short it below 150. Well, if you're short and you held the short, congratulations, you owe me a drink anytime we meet and see us, because things have been going very well for you, but I don't really want to take a bigger victory lap than that, because people are hurting. People are hurting. People got sucked into the IPO, and hopefully you got stopped out already. Hopefully you're definitely not leveraged. So, very short term, SpaceX is getting oversold. There's no denying that. However, the easy trade right now for the institutions is on the short side, and they will do so until they feel, okay, the trade is kind of fading out. Then they're going to close out the short positions, because obviously they want to suck up to SpaceX. All the big Wall Street banks want to suck up to SpaceX for future secondary offerings that are going to be coming, because this company is going to need a lot of money and all the banks are going to be in it. So they're all going to come out at some point with very bullish reports and major price targets. So when SpaceX comes back and says, well, we need to do a big ass capital raise, damn, shouldn't have cursed. There comes the YouTube flag, can already see. They'll say, well, look at our report. We said there's a price target from, I don't know, $500, $1,000, whatever, right? We tried to help you guys. Hey, give us some of the business for the secondary offering. This is coming, right? If you're shorty, you need to be aware of this. This is coming. However, what is also coming, and this is the big black box, and that's why I do not think that institutions gonna take the long side in the coming weeks and probably 2 months, except for short covering, is 2 lockup periods are running out. One in August, one in September. They include a significant chunk of shares together. And the question that nobody can answer right now is, will these people sell and do a fire sell and say, I want to get what I can from the stock, I'm selling everything, this is my chance? Or are they true Musk believers and say, I fully believe in SpaceX, I'm going to keep my shares, this share literally is going to go to the moon? Nobody knows this. If you judge it by human behavior, uncertain market, bad chart, terrible IPO, psychologically you would lean towards they're gonna sell. But again, we don't know. And if I don't know something, I like to stay away from a trade. There's so many different trades that we can take. And here at Hot Trades of Today, for example, we focus a lot on the commodity sector. And by the way, quick housekeeping. On Friday, we're going to have an interview with the one and only Rick Rule. And if you don't know who Rick Rule is, so you know, like you have Warren Buffett, you have Peter Lynch, you have George Soros for the equity markets and for the FX markets on the Mount Rushmore of the greatest investors all time. Rick Rule is the equivalent of any of these three legends for the commodity and the commodity stock sector. He is on the Mount Rushmore of the best commodity and most successful commodity investors of all time. And we're going to talk on Friday here at Hot Trades of the Day about, and here's where things become very interesting, and then we're going to flip to the Nasdaq because you need to see this, about how do commodities and commodity stocks behave in a crash, and what strategies can we apply if we want to invest in commodities or in gold or in silver or in the mining stocks. So this is a really interesting video for commodity investors and tech investors alike. And with that, let's flip to the Nasdaq. And boy, you need to know this. So this is the QQQ since the beginning of the year. Here's the beginning of the year. And we have formed what's called a diamond pattern in the chart. You may have heard about it already. To be completely honest, I've seen one other person talk about it, but hey, that's more than zero people. Diamond patterns are very unique because they consist of a first part where you make higher highs but lower lows, and then it flips and you make lower highs but higher lows, as you can see here, and that forms the diamond. Diamond patterns, especially at important technical levels or all-time highs, so towards after an extended move. And if we zoom out on the Nasdaq, we can see, yeah, we are definitely after an extended move from the 2022 lows that we saw after the 2022 bear market. So when these diamond patterns happen, and they happen rarely, the move of the underlying, in this case the QQQ, so the Nasdaq, in the direction of the breakout is severe. And I want to show you an example from the commodity sector that gives you a little bit of an indication of this. So in the commodity sector, last fall, I identified ExxonMobil. You know ExxonMobil? Yeah, that ExxonMobil, right? That lame fart from the oil sector. Let me zoom out. So what do we see here? Big up move since 2020, and then a long diamond formation at the all-time high resistance zone here. And I pointed out the breakout in the fall of 2025 to the subscribers and said the same thing that I just told you about the QQQs. Diamond formations, very rare. If we get a breakout, traditionally, price moves heavily with massive swings and moves in the direction of the breakout. And look what we did with ExxonMobil. With ExxonMobil, that old fart, 55% in 6 months. That is huge. Now, think what this means for the more volatile tech stocks. Now, this is a shorter diamond than the one that we saw at ExxonMobil, but think about what that can mean for the tech stocks if indeed we break below it. And as you can see right now, price is trying to move back into the diamond formation, probably a retest of the 50, probably a retest of the long downtrend of the second half of the diamond formation. But if it doinks off this and then breaks down, things could get really dicey for the tech stocks. So what do I mean? Could be something like this. And then first price target would indeed be the 200-day moving average. So something around 650 to 645 in the Nasdaq Composite. So that would be around a 10% correction, which doesn't sound like much, but I mean, remember this that we had in the Nasdaq? Especially the second correction here, which brought us down 12%, so not that much more than the 10% downside potential that would come out of a breakdown below the diamond formation. It felt like the world was ending. The aliens are landing. Independence Day is happening for real in the markets. So be very, very careful, especially with earnings season coming right now. You can clearly see that the big institutions are starting to get worried. This massive spending of the Mag 7s looked awfully fun and nice for a while. But now the big investors are asking themselves, okay, how are you guys planning to make your money back? We already see the Oracle chart. Let me pull this up. $2026. Yeah, that's a pretty terrible chart. So we already see breakdowns in some of the big tech stocks. Do I think this is going to be the end and this is going to be the crash? I do not. And the reason why I don't think this is, the banks are strong. The bank stocks are strong. And usually you see weakness in the banks before a crash happens. The second thing is they're the big AI IPOs that Wall Street wants to bring to market, and there are a lot of big bonuses, and boy does Wall Street love their bonuses involved in this. So they will try everything to keep the market up. And we have midterm elections, so Trump will try everything to keep the markets up. But if you're leveraged in this market, if you're highly invested in the South Korean market, and if you know, you might want to close out those positions to protect yourself. This is not the time to be a hero. This is the time to be careful. That's it for today. Subscribe to the channel if you like the content, if you like these type of videos, and we will see us tomorrow. Have a great day. Bye-bye.